I'm actually thinking about what would markets be doing if that bullet was just about an inch to the right. I mean, pretend Trump had been killed.
When people are saying what I consider to be just without thought, that it was an operation.
Full disclosure, I am someone who thinks that January 6th was a setup. I'm not trying to convince anyone of that.
You think Biden's less inflationary than Trump?
Bitcoin went through the roof after the assassination. Welcome to the Futures Edge Show. I am Jim Iuorio. That's Bob Iaccino. Thank you guys again for joining us. Today we have one of our friends, and I'm glad we have him on the show today, Jared Dillian, who is the author of the Daily Dirtnap, the author of one of my favorite books of the year, particularly about personal finance, which is No Worries, How to Live a Stress-Free Financial Life, which, by the way, Jared, I have recommended everyone under the age of 30 should definitely read it, but anyone can read it. I think it makes a ton of sense, but I think it's very, very valuable. How are you, my friend?
I'm great. Thanks for asking. I had a lightning struck my house over the weekend. It like fried my internet. I spent the last 48 hours trying to get it up so I could get on this interview. So,
well, fantastic. Thanks for going the extra mile for us. We appreciate that. Okay, so Bobby and I just did a quick take about the assassination. First of all, there's a lot of this stuff. We are all market people, but markets care about what's going on, the landscape that's going on, and everything changed quite a bit on Saturday evening when the assassination attempt took place. You saw markets react today. What do you think we're being told by markets?
Well, I'm actually thinking about what would markets be doing if that bullet was just about an inch to the right. I mean, pretend Trump had been killed. What would markets be doing today?
Interesting. I don't know. I think that there'd be disaster. I think there'd be a rush to buy Treasury bonds, which is odd because it's the world's safe haven, despite the fact that it's us that's the messed up entity. But in the past, even when those bonds get downgraded, people end up rushing in to buy bonds in the ensuing chaos. So I think bonds would have gone through the roof, yields would have gone down. I think the stock market would have gone lower. You do too, right?
Oh, yeah. I mean, I think over the course of a week, it would have been almost as much as 9/11. I think stocks would have been down 10 to 12% in a week.
You know what I hate about 10 years ago, 15 years ago versus today? Like you pose the question, like I posed the question, there's a lot of really odd things that happen. You're a former military man and you're a very clear thinker. You know, not securing that roof, the kid knowing that the roof was not secured, the 25 people screaming there's a guy up there for 2 minutes. Is it reasonable for me to demand answers, to say, yeah, sure, it's probably just a kid crawling up on the roof trying to get a name for himself, but it certainly may not be. Is that idiotic or no, in your opinion?
I always assume incompetence before malicious intent.
I used to.
So having worked for the government, I can tell you that there is a lot of incompetence, and, watching the Secret Service after the bullets hit, they were totally unprepared. I was watching, it was on Twitter, I think. There was an interview with Dan Bongino, who used to be Secret Service. And he basically talked about the roof, their actions afterwards, just like the levels of gross incompetence that were on display. And he also said that the Trump campaign has been asking for more resources for security for some time now, and they've been rebuffed. So I don't know if it was a manpower issue or what. 130 yards away, I mean, you can shoot deer from 130 yards away. Like that's not a long distance at all. For that roof not to be manned is inconceivable to me.
So, Jared, let me ask you then, as a former military man, for lack of a better phrase, I don't know how much you know about snipers or actual, distance shooting. I believe you were in the Navy, right? Is that
I was
correct?
in the Coast Guard.
You're in the Coast Guard. Okay. So
Yeah.
I don't know how much work you guys did on that. Maybe it's a lot. Maybe it's not as much. When people are saying what I consider to be just without thought, that it was an operation prepared by Trump. How does that hit you?
I was on Facebook later in the day with my spotty internet coverage, and about an hour after the attempted assassination, it's my nephew's wife's father went on Facebook and said that the whole thing was staged. And I literally, like, I haven't said a word in anger in Facebook like on 10 years. And I went to the comment box and I typed out, "Are you fucking retarded?" And I almost hit the button, and I said, "Well, I got to spend Thanksgiving with her daughter, and that's going to be tricky." So I deleted it, but that's what I think of it. That's somebody got killed. Like, it's not staged. That's insanity.
I think complete insanity. When I hear that, like, I don't put it past people to stage events, but not when a bullet comes zipping by and hits you in the ear and then hits somebody else.
Well,
that's
sort of where, Jimmy, that's where I was going, right? Is it, if you were going to hire someone to stage an event like that, let's say you were just that batshit crazy. First of all, I don't think a narcissist like Donald Trump, by the way, full disclosure, I'm a fan of his policies, but I do think he's a New Yorker. New York, every New Yorker I've ever met has thought they were the most important person in the room. Not unusual to me. Jared,
Yeah.
Sorry about that. But when you look at it from that perspective, would you really go, hey, we want to get this guy who was cut from his high school shooting team because he wasn't a good enough shot, and say, do me a favor, whiz it right by my head so that the people behind me are in danger. And, if you clip me a little, it's fine.
I mean, it's back like to Jared's answer for that.
I literally, and by the way, the Secret Service or the SWAT team is probably going to kill you right afterwards. So try and get out of there as quickly as you can. It's like one of the dumbest things I've ever heard.
Yeah.
But there have been people on the right who have said certain things are psyops and they're government ops. And, like, for example, the Patriot Front, right? Those guys just look like feds because they're all in shape and they wear masks and all that stuff. And, I'm sure the left thinks the same thing when people like us are going, come on, those guys look like feds. By the way, I watched an interesting interview with Patrick Bet-David and the head of the Patriot Front. It's about an hour long. It's really interesting. You guys should check that out. But that's kind of where I was going this. I mean, the whole thing, if you just sit and think for a second, this was a Trump operation to secure the election. He was already in the lead in all the polls. He's got another debate coming up.
Yeah. First of all, full disclosure, I am someone who thinks that January 6th was a setup. I'm not trying to convince anyone of that, and I don't give a shit if everyone thinks I'm crazy for thinking that. I believe that there was scores of federal agents in there. I think there were a lot of, so again, I believe in these. So then I have to ask myself, well, am I biased? But I don't really have a side. I didn't think. I gravitate more to the right, obviously. But any thoughts on that, Jared?
I just get back to what I said before. It's just incompetence.
Are you including me in that now for my January 6th?
No.
Oh, not you, Jim.
Like, I always assume incompetence. And by the way, the Coast Guard is, among federal agencies, is probably one of the most competent. And still, like, there were just fuck ups all the time. And that is the nature of government. And government, by the way, government doesn't have a P&L, okay? So they're not accountable to profits and losses. They don't care if they lose money. They don't even really care if people get hurt. What they care about is when they're embarrassed, when they lose face, right? That's what government cares about. It's also true of the Fed, okay? Like, I kind of want to steer this back to...
I love that steer. You're
Marcus.
A professional. Well done. Yeah.
So the Fed, I've had this theory about the Fed for a long time, that the Fed always pursues the path of least embarrassment, right? Yeah. Like, they are constantly in face-saving mode. They will not take a risk and do something that will cause them embarrassment in the future. So if you look at the Fed under that framework, you can predict what they're going to do all the time. They always operate under the framework of least embarrassment.
So what does that mean they're going to do? Goldman comes out with a piece today that says they think they're going to cut in July. They think the stage is set. What do you think on that?
No, they're not going to cut in July. I mean, Powell was talking today, and he did not give any clear signal. I'm doubtful they will cut in July. They will cut in September. I think they will cut in September. But, the Fed, because they're operating under least embarrassment, they wait for all the evidence to come in, right? Like the Fed has thousands and thousands of economic data points. They can see when stuff starts to turn, but they won't take action until there's a preponderance of evidence that supports that action, right? So we've been seeing the data deteriorate for a few months now, and the Fed is finally getting around to cutting.
So just to put a finer point on the last thing we were talking about, I want to talk about the Fed. I got a question about that, but mid to late April, I think it was Missouri Democrat Benny Thompson introduced legislation to remove Secret Service protection from convicted felons. It's Bill 8082, I believe, Disgraced Former Protectees Act. So that supports the kind of thing that gets Jimmy going. It's like,
no doubt,
we just tried to remove Secret Service protection. Then there was an assassination account. Granted, it was just introduced. I don't even know if it's been looked at yet. But all right, so the Fed. Jerome Powell was talking today with Dave Rubenstein at the Economic Club of Washington. By the way, for anyone who's watching this a week later, it's July 15th, I think, on a Monday. So we're going to be, this is going to be aired about a week from now. So today was a week ago. And he, again, was very much in the center where he was like, and by the way, it's a center between nothing done with rates and rate cuts, not rate hikes.
Yeah. Right.
The bond market, however, today specifically started moving as if more inflation was coming. In other words, started moving as if Trump were going to be president and the reports on what would happen to inflation were actually valid. So you're saying that the data is turning and the Fed's finally getting around to cutting, and I agree, they're going to cut in September. But do you think it's a cutting cycle, which I think is bad? And B, do you think that all the reports from the sort of mainstream media, I hate that phrase, but I need to use it, that a Trump presidency would be more inflationary than a Biden continued presidency are valid?
I think knowing what we know now, they are both inflationary, but I think not equally inflationary. I think Biden is more inflationary, which is something that the market doesn't fully recognize. Is this the beginning of a rate cut cycle? I think it might be. Look, like the funny thing about the Fed is that nobody is talking about monetary policy after November. Nobody knows what monetary policy is going to look like after the election. And it could take two different paths, if Biden is president or if Trump is president. If Trump is elected and he does to the Fed what he did in 2017 and tells them that he wants zero rates and negative rates, then you could see a rate cut cycle. You could see rates come down 100 to 150 basis points, and you would see the curve steepen. And that is the Trump trade. Today, bonds are down, but not uniformly. 2-year notes are about unch, and the long bond is down over a handle. You're seeing a pretty vicious curve steepening. The 2s 10s is about negative 23 basis points right now. It was like negative 35 last week. So the curve is steepening. It's pricing in Trump.
I have the steepener on it, and this thing, helped me. I don't like to take advantage of tragedies like this, but it definitely helped me too. But for the people watching too, and then I do have a question, but the steepening generally happens. We've stayed inverted. We just passed our 2-year birthday of being inverted. And the length has no bearing on the recession coming, except for the fact that it makes it more likely. It doesn't mean that it's going to be a long recession. I believe that's happening now. What it is that we are now believing that the Fed is going to cut rates and cut rates relatively soon. And that's the biggest part of the steepening, correct, Jared?
Usually, if you get a bull steepener, for sure. Yeah, sure. It's the front end coming down.
And you think that's what's going to happen now, right?
Yes.
Yeah, I do too. Now, also, do you think, okay, here's something about Trump versus Biden, as long as we're on that theme. So the theory that the left always give, well, Trump racked up debt. Trump racked when he shouldn't have, when he supposedly had a good economy. And I agree with that 100%. Trump racked up debt after March of 2020. Well, yeah, okay, he was worried about a deflationary spiral. I have to think there might be a chance that he's not so stupid as to assess the current climate and environment and act accordingly to that. And if inflation pressures are there already, won't be as profligate a spender. Am I too hopeful?
No, I don't think so. I mean, keep in mind that, ex-Trump, the vast majority of the Republican Party are small government people. You have guys like Thomas Massie in Congress who, I mean, you have libertarians, you have small government Republicans. I think there is a decent chance that a second Trump term is not going to be the same as a first Trump term. Okay. And first of all, I want to point out that the deficits that Trump ran, he inherited deficits of about 400 or 500 billion. Before the pandemic, they were up to about $1 trillion. I think he gets a pass for whatever happens after the pandemic.
Agreed.
And then under Biden, they've consistently been close to 2 trillion, right? So they've been much higher under Biden. So I think there's a chance that you could see Trump eliminate cabinet departments, eliminate bureaucracy. I mean, I'm hopeful as you're hopeful. I think that's possible, but we'll see.
I'm hoping our friend Vivek Ramaswamy ends up with some sort of position of power to help eliminate some of those letter agencies that clearly aren't necessary. But to your point, Jared, our friend Mike Singleton from Invictus Research puts out a really good newsletter that includes a daily edge video. And within that, he has a chart that I've pulled up on my screen right here. And this is fiscal deficit projections as a percent of GDP. So in other words, for those of you that don't know, a fiscal deficit is the income the government takes in minus what they spend. They always spend more, right? Always. And they make that up with Treasury sales. They make that up with borrowing money. All right. So Trump, 2017, budget deficit as a percentage of GDP, 3.4%. 2018, 3.8. 2019, 4.6. 2020, 14.7, 2-year point. COVID, right? Then we get into 2021, which is Biden, 12.1%, 2021. Let's give him a COVID pass too on that, right? Then 2022, 5.4, 6.3, projections for 24 are 6.6, projections for 25, 6.1, projections for 26, 5.1.
No pass.
Trump never ran an over 5% deficit. And the OMB is not willing, actually never ran one over 4.6% of GDP. And the OMB is not willing to predict that Biden would run a sub 5% one, right? So to that point, almost by the very fact of those numbers, Biden becomes more inflationary, right? It's more government spending irregardless. Is that a word?
No, but I'll let Jared answer first, but I go against that. I'll tell you why.
You think Jared, Biden's less inflationary than Trump?
No, I think they're both inflationary, but there's a component that's missing. But Jared, you answer first.
A lot of that also depends on the makeup of Congress, right? Mm-hmm. So
sure.
As of today, we are pricing in a 50% chance of a red wave where you get the president, the House, and the Senate. 50% chance Republican red wave. We are pricing in a 2% chance of a blue wave. So Democratic president, House, and Senate. Imagine what the deficits would look like under a blue wave, right? Where there was absolutely no spending control at all and the Democrats had control. Like we would see deficits of 10, 12, 14% of GDP.
That's
for sure.
Yeah.
So yeah, I think, it's funny because the Trump trade is making certain assumptions, and I'm talking about the curve steepener here. Yeah. It's making certain assumptions about how Trump is a big spender, and I think some of that is because of the history of COVID, but I think those assumptions are actually incorrect. So, pretend we get into November and the curve is steepened significantly and 10s are above 5%. If on election day 10s are above 5%, I think you would buy 10s or 30s. I think that would be the trade. So
interesting. So here's Bobby. Here's why I disagree with you, because I think along with Biden, I picture the numbers you ran combined with the fact that overregulation and across. By the way, I don't know if you guys noticed today, July 15th, they've now want to pass a federal law that caps rent increases by 5% per year. I don't know if either of you guys saw that. So again, another, wild overstep in regulating the housing market. They've done it in oil, they've done it in cars, they've done it in microchips. But I think if a Trump comes in and starts to deregulate those businesses, and I criticize Trump on corporatism as well too. It does seem like he wants to give money to different corporations too, but he does it and genuinely wants these corporations to make money and succeed. So I think the economic power that could be slightly unleashed by President Trump, who really wants to tackle regulation, could be a counterbalance to the inflation. So again, I think both of them are almost equally inflationary, but with Biden, you have more of a stagflation scenario. And with President Trump, you have more of a robust economy plus inflation that's bad. Do you think that's a decent, reasonable take, Jared?
Yeah, I think that's pretty accurate. Yeah.
So now let's look at things. Okay, so Bitcoin went through the roof after the assassination. So at first I thought, oh shit, it's a flight to quality trade, and now Bitcoin's the quality. No. Then I realized after a couple of minutes that because Trump has been a supporter of Bitcoin and an advocate of Bitcoin, and if it's now the odds of him being president, it goes higher. Now, gold rallied toward the end of the day. Stocks did very, very well. Do those trades continue in your mind?
I mean, gold just broke out. I mean, the previous intraday high was 24.30. It traded 24.40 earlier today. We've had a 2.5 month consolidation that it just broke out of. Like, I think it's incredibly bullish for gold. The one thing I want to say, and I've been beating this drum on like every podcast I've gone on, I think the most mispriced security on the planet right now is S&P vol. I think S&P vol is incredibly mispriced. We just had an assassination attempt that was almost an assassination, and the VIX is at 12.
Yep.
Doesn't make any sense, right? So what I've been doing is I've been buying long-dated S&P puts down about 20 to 25% out in 2026, lots of Vega, really meaty puts with lots of Vega. They're incredibly cheap. There's 112 days until the election. We could have another assassination attempt of Trump or Biden. There's any number of things that can happen. Things are going to get more crazy. Like, you have to own this vol. Like, it is absolutely mispriced.
Yeah, and for those who are listening to who trade options, by the way, so Jared says you said 25% out. So if you have a year on those things, you don't need the market to go down 25%. If the market has an incredibly sharp 10% down move, and volatility spikes to 50 again, those things are going to seem like they're in the chips, even though they're still far out of the money. Just to be clear on that, correct?
Yep, correct.
Yeah. Okay. So what about? So you said gold's mispriced and gold broke out. You look at silver too. Now silver did kind of trailed gold a little bit today, and I read some smart guys saying, well, silver is not then is important in the green revolution, as a conductor and in solar panels. So silver may trail. Now, from a technical standpoint, silver looks like if it settles a day over 32, then I think it's shooting back toward 40 again. Where do you think of the silver market?
I don't spend a lot of time watching silver. I mean, look, like, it broke out. I think the next stop is 50. I think it gets there over a period of months. I don't really have any short-term views on it. So
no, but here's so all the things we just mentioned are part of a whole theme for me that I want to get your take on. I believe either Trump or Biden, they're spenders. Let's say they're spenders. Let's give that to the left, pointing at Trump. So either way, we're going to have a difficult time at some point selling long end treasuries if there's an enormous amount to be issued by the Treasury. I still think the Fed's going to come back in and support the Treasury market at some point in time through some sort of makeshift QE. That's why I'm long Bitcoin, gold, silver, real estate, copper. Do you think that's a legitimate worry to have? Have you seen anything in auctions that make you think demand for U.S. debt is slipping?
I think no. The auctions have been sometimes sloppy, but mostly okay.
And
but
better recently too.
Better recently. The way I look at gold as basically a free option on monetization, right? The idea that interest rates go up, they go up to a point where the economy can't tolerate it. The government asks the Fed to cap the yield curve. The Fed caps the yield curve. They print money to buy an unlimited amount of bonds to support that level in yields. And that's where gold goes parabolic. That is going to happen. I don't know if it happens next year, in 5 years, in 10 years, but it is going to happen. And that's what it trades like,
Yep, I fully believe it's going to happen as well.
Yeah, both Jim and I I've been long gold since November of 2022 and haven't really even looked at it other than some intraday trades. I just want to throw out here real quick. Everybody that's watching this at this point, because it's out a week later, knows this, but Senator from Ohio, JD Vance, was chosen as the.
Oh, he was just chosen.
Yeah.
You guys all know it because it's a week later. We're just
Yeah,
finding
it's
out
a week
now.
later.
Do we like this guy?
Yes. So
Yeah.
have you read Hillbilly Elegy?
It's a great
No,
book.
one of my sister's favorite books, though. She keeps recommending
It's
it.
Yeah.
a great,
So
great.
this is JD Vance is truly an American story. This is a guy who grew up basically sleeping on dirt floors in a cabin in the hills of Kentucky. And his family moved to Middletown, Ohio. His parents were losers, basically. He was raised by his grandmother. He got terrible grades in high school, but had good SAT scores. He got into the University of Ohio. From there, he got into Yale Law School. His advisor at Yale Law School was Amy Chua, who is the Tiger Mother author. She introduced him to her literary agent. That's how he got the deal for Hillbilly Elegy. He graduates from Yale Law School. He becomes a VC, and then he's senator of Ohio, and now he's going to be vice president. Just an incredible story.
Wait, he wrote Hillbilly Elegy?
He
Yeah.
wrote it. He lived
I've known of the book forever. I've never put that together until this moment.
Yeah.
It's a movie as well, says Haley. Yeah, right. That's amazing. I didn't know these things.
Yeah, he's a guy who he's sort of well, I don't want to talk race, but he's sort of like the example that people bring up, those sort of West Virginia poor people who have no opportunities, who have parents that aren't raising them, and they get raised by the grandparents. A lot of people, when they get into the race conversation, talk about the exact region he's from as an example of white poverty that relates to black poverty, and nobody thinks about it. They think about it in terms of race instead of thinking about it in terms of just abject poverty. And he's like the poster child for that. In my
because I didn't know much about him, but if you guys both dig him and think he's a good candidate, which, by the way, one other thing too, I put out a thing today, is that I genuinely believe that the assassination attempt may have actually even changed who the VP was going to be. Bear with me here before you think I'm crazy. I think prior to that, he may have had some notions in his head that he had to pick someone who gets votes instead of going from a particularly meritocratic sort of standpoint and just picking the best person for it. I think that the votes are had now. Now he can just pick the best person for it. And that obviously is JD Vance. Do you agree?
Well, I will say that the betting odds on JD Vance have been going up for about a week now. They were going up before the assassination attempt. And also Burgum, people said he would be a good fundraiser. He's rich. But, I paid attention to him during the primary campaign, and he is really not impressive. He's not an inspiring person. JD Vance is truly inspirational. So
that's awesome. That's so good to hear. And wasn't he a libertarian at some point in time, like a registered libertarian?
No, well, maybe in the past, but he's not now. His views are very aligned with Trump. He's almost like identical to Trump. So
interesting.
That's why what you said, Jim, may not. I think I kind of disagree with you. First of all, have a conversation with Burgum. Go ahead. He's the dullest guy I've ever seen speak publicly. Number one, he would have been a great fundraiser. JD Vance is a flamethrower, man. He's like not shy.
Okay.
So I think maybe possibly any negative toward JD Vance that some of Trump's advisors might have been saying, look, he's just as, what's the word? Not divisive, because I don't think Trump is actually divisive in and of himself, but he's just as much of a hot button type of person as Trump is. So
interesting.
I think what Jared said is very, very accurate, that he's almost a carbon copy of Trump, just younger and actually from poverty.
Awesome. Can we pivot now? Because your book, by the way, I felt it changed the way I thought about my longer term money, by the way. And I did when I made, in April every year, I make my entire contributions to my 401k for the entire year before tax day. When I did it, and I did split it up exactly the way that No Worries, Stress-Free Financial Life, whatever that book is.
Can I pause you and read that part of the book?
What's
I actually have it open to that page. If you'll let me read that part of the book.
Please do. And by the way, you people out there, This book, these numbers are amazing of the awesome portfolio. What does it say?
So I'm just going to read a section of it. And this is out of this book. If you want to go out and buy it, I think you guys should. So the ideal portfolio should have stocks, bonds, cash, gold, and real estate. In what proportions? Well, why not keep it simple and give 20% to each? 20% stocks, 20% bonds, 20% cash, 20% gold, 20% real estate. This is what I call the awesome portfolio. Back when I had a radio show, I used to call it the 20 portfolio.
That's hard to say. Awesome portfolio is better.
I'm going to skip down to here. I back tested this portfolio back to 1971, the furthest I could go back, because 1971 is when Nixon took the U.S. off the gold standard. Since 1971, the awesome portfolio has returned 8.1% annually. Here's a key: with nearly half the volatility of a portfolio that is 80% stocks and 20% bond. 8.1% is pretty good. That's not much less than what you might get with stocks, but with half the volatility.
Blows me away. So, I mean, depending on when you're going to retire or when you need the money, again, I didn't hesitate. And can you give the 5 ETFs, by the way, too, that you think represent it the best, Jared?
Yeah. So for stocks, you would do VTI with the total stock market index. For bonds, you would do BND. That's the Vanguard Total Bond Market Index. For gold, you would do GLD. And for real estate, you would do VNQ, the Vanguard REIT Index.
Right. And now, by the way, too, when we're talking about cash, you have that in 3-month bills, and you're getting 4.8% on your 3-month bill. So that makes it an even better kicker, correct?
Yep.
And when do you rebalance this to 2020, 2020?
Once a year. It doesn't matter when you do it.
As long as you're consistent doing it, right? Okay, so tell me this. Is when you look at things like a 22-year-old versus a 50-year-old, would you make any tweaks to a 22-year-old or a 50-year-old?
Absolutely none.
Okay.
Absolutely none. No.
I think it's half the volatility, right? Why would you?
Why would you? That's
the other thing that Bobby didn't mention is the drawdowns, right?
12% max drawdown, right?
12% max drawdown, which actually was in 2022. So in 2008, the S&P 500 was down 38%. The awesome portfolio was down 9%.
Okay.
So if you're like, look, I get 1% less than the stock market, I have half the volatility, and the worst year that I can possibly have is down 12%. How do you not do that? That's incredible.
And incredibly, when you think about why it lost 12% in 2022, too, where we just knocked the shit out of bonds, to like at a historic rate, which just amazed me to go from 0 to 5% in the 10-year. So, yeah, I think it's crazy. And by the way, those people who are listening to this too, there's a lot of other shit in the book too. So don't just think, okay, this is the takeaway of the book. This is not the takeaway of the book. There is a lot of other money things, particularly for younger people, that you will absolutely be blown away because you hadn't thought about it. By the way, I have to say the one part of the book, and I was just talking to my daughter about it before, when you talk about student debt, and I know she does have some student debt. She's an adult, and it happened long after she was outside of my umbrella. And you said you don't take on student debt. And then you go, well, as long as you're not going to Harvard or Stanford. It's like, okay, thank God, because she did go to Stanford, and that's where she accumulated the debt from. But she's managing it pretty well, I think. So can you go into that a little bit about some of the mistakes you've seen with student debt?
You know, I teach at the university level, and in my class, I ask my students, I'm like, do you know that this student debt that you've taken on cannot be discharged in bankruptcy? And I explain what that means. If you declare bankruptcy, your mortgage goes away, your car loan goes away, your credit cards go away, but you will always have the student loan debt. You will always have it. And I say, do you know that? And nobody knows. There is no education. There's no counseling when these kids sign the paperwork for the loans. They're 18 years old. When I was 18 years old, I didn't know anything. I didn't know how to do my taxes. I was so unsophisticated. How was I supposed to understand the consequences of signing up for a bunch of debt that I was going to have to? I mean, it's insane.
Yeah.
So
certainly is. And another one of the key platforms, pillars, is the right house. Living in the right house, the right price point, the right mortgage level. Can you go into that a little bit too?
Buying a house for a lot of people is an emotional decision. They're looking for houses. They come across a house. They're like, oh my God, the kids can play in the backyard and we can put the TV here and we can put the dining room table here. We have to have this house. Problem is, it's a little bit of a stretch, right? It's maybe 500 square feet bigger. It costs $100,000 more. And they're like, all right, we can stretch. We can do it. Okay. If you stretch, the problem is that more and more of your income is going towards the house and less of it is going towards savings and investment and also fun. You will have less money to take vacations and do fun things, right? So the house crowds out everything else. So a bank will approve you for a mortgage that is 42% of your income. You should really try to keep it at 25% of your income so that you continue to save and invest.
Yeah, and I will tell you this, people, and then Bob, you get the next question.
Yeah.
I'll tell you this, that you all think that your happiness is going to be tied with the bigger house. I can guarantee you unequivocally it is not tied to the bigger house. You comfort, maybe air conditioning, a good mattress. These are more important than having 3,000 square feet per person. Bob?
Yeah, it's interesting. One of my most financially sound friends, personal friend of mine, hasn't owned a house since the 80s, maybe the late 80s. He's lived in Manhattan. He's lived in like an 850, 900 square foot one bedroom, which is outrageously priced. And he has told me, and he's in his 50s, he goes, I will never own a house, ever. And now he, of course, because he's worked in markets, he's been at big banks, he's been a trader, he understands finance. One of his claims, and I believe him because I know him personally, is he could do more with the money than he's going to earn on a house. He can earn more off of his savings than he can by just owning a house. So like at number two, I eat out almost every night and all we want to do is travel and we don't have any kids. He goes, so why would I lock myself into a structure that probably if you took away sleep, I spend 35% of my time in? Why would I lock myself into that? Jared, do you have any thoughts on that kind of an approach?
Well, I mean, look, there's more than one way.
Not most people, right?
There's more than one way to skin a cat. I think for a lot of people, look, a house is a terrible investment. Historically, residential real estate has gone up 4% a year. It barely beats inflation. It went up a lot in 2021, but over time, it goes up about 4% a year. It's not a great investment. But for a lot of people, it's really the best investment because it's an asset that they don't watch the price of it every day, right? They don't have an app on their phone where they can see their house ticking, right? So they can buy a house, live in it for 10 years, pay down the mortgage. It increases in value a little bit. They build equity, they sell it. And that is how the vast majority of the country builds wealth. I think your friend is much more financially sophisticated.
Yeah.
And for him, having liquid net worth that he can put into stocks and investments and earn more than 4% a year makes sense for him. But I think for the vast majority of people, a house is really, look, this is Myrtle Beach. So this is what happens in Myrtle Beach. You have a plumber in Brooklyn who bought a house in 1979 for $70,000. He sells it for $900,000. He moves to Myrtle Beach. He buys one for $300,000 and he lives off the $600,000 and he never invested in the stock market in his entire life. Like that story gets played out over and over again.
Okay,
So
I will add one thing to the house thing too before you come in, Bobby. Is that if you plan on having a brood of children, how the stability of home ownership, I personally think is an important part of the building of a family. That's all I will say. But yeah.
Well, what I was going to say was, from a perspective of home ownership, how many people actually keep track of all the other expenses that aren't, obviously you don't know specifically, but in your mind, from people you've talked to and in your travels and your teaching, how many people actually keep track of what they've paid for homeowners insurance, what they've paid for repairs, what they've paid in taxes, real estate taxes and others, what that cost of the actual house or zone is cost them versus I paid 300, I sold it for 600, I made 300.
Yeah, most people don't keep track of the basis. I mean,
The
there's
basis. I didn't think
there
of it like that.
yeah, we have a cult of homeownership in this country, right? And I get calls from 27-year-olds and they say, "Jared, I don't own a house and I don't feel like an adult." And I'm like, "You don't feel like an adult? Like that's you don't have to own a house to be an adult. You can continue to rent. There's no shame in renting. Renting is cheaper than owning 90% of the time. 90% of the time renting is cheaper than owning. And just like you said, property taxes, homeowners insurance, homeowners association dues,
Repairs.
utilities, repairs, maintenance, like owning a house is expensive.
There's also improvements people do that they don't get the money out. But based on what you just said, isn't it the same as, and you touch on this quite a bit in the book, people who don't, they view college as something you're supposed to do, as opposed to somebody who might say, look, I didn't get into Yale or Harvard or Brown or Cornell. I'm just going to go ahead and become an electrician's apprentice and get started making $75,000 a year and see where my life goes from there. Is it the same mindset? Says if I didn't go to college, I'm a loser. That if I'm 27, I don't own a house, I'm a loser.
I think less and less people feel like a loser if they don't go to college.
Mhm.
I think that mindset has been changing for a while. There's a lot of highly educated waiters and waitresses out there. Look, I have a great story. I had an intern at the Daily Dirtnap. I always have an intern. I get interns from the school. And this kid worked at an investment bank for 5 years. I think it was 5 years. And he quit and he took out a loan and bought an HVAC company. Now he owns an HVAC company. He put the air conditioning in my new house, a geothermal system. He is killing it. He is absolutely killing it. I mean, he went to college, he worked in an investment bank, and he said, I can actually make more money doing HVAC than as an investment banker.
Luke Groman.
Yep. I was thinking Luke Groman too, friend of the show.
Jimmy, do you
Always
think
talk about
as Jared, I don't know if you're a parent or not. I am not. Jimmy, do you know if the pressure from other parents is kind of still there? This is something family members of mine talk about. They're like,
there's
look,
no
if your
question
kid doesn't-
about it.
yeah, it's
Yeah,
like if a kid doesn't do an activity, they're not going to get into a good college. And then what are you going to do?
You guys wouldn't believe how crazy it gets, particularly in relatively well-to-do neighborhoods. The pressure on each other of how you're supposed to raise your children and everything. It's just crazy. And my kids were relative go-getters. I think it was because we made studying fun, kind of thing when they were little kids. But there are still tons of people who think that we were some sort of tiger parents to think, oh, they're his kids got 36s on the ACT. They were all over him. And that just was never true. But there's a tremendous amount of pressure. Jared, you have no children either, right?
No, I don't have any kids. No.
Right. It's a special trip. They piss me off more than they don't. No, they don't. I'm just kidding. Love you guys. If you're watching, you're wonderful.
You know they're not watching.
They're not. Of course, they're not watching. They couldn't listen to my voice for more than 10 seconds without it making them want to throw up.
Yeah. So the last thing I have for you on any sort of general subject, Jared, is what do you think of the bond market right now? Well, you talked a little bit about where the yield curve is this week versus last week. Do you think we're finally at that point where the shift continues? And based on history, if we are, that's more recessionary than it is not, just based on when the recessions usually happen. Or no, let me rephrase that. Not the recessions, but the stock market corrections usually happen after the inversion has normalized. Do you have any thoughts on that?
No, that's 100% correct. And also the recession. The recessions, the yield curve inversion is an indicator that there will be a recession at some point in time. When the yield curve steepens again, when it actually steepens, is when you usually get your recession. By the way, it happened in the pandemic. In the pandemic, the yield curve inverted just a tiny bit, and the pandemic happened, and the market crashed. The curve steepened like crazy because we dropped rates to zero and we got the recession. Happens all the time. So, yeah, if you see the yield curve go positive and then go 50, 100 basis points positive, I think we're going to get a recession.
Can you explain the mechanics behind that? Like, why would that be? Is it just simply the Fed is cutting rates and the economy is slowing and those two things are related to recessions?
Yes, but it's not so much that the Fed is cutting rates, it's that the market is pricing in the Fed cutting rates.
Gotcha.
Right.
Gotcha.
So
That's interesting. So, by the way, based on the economic data we've seen, we saw shitty retail sales. I've been arguing for 6 months, longer even, that the labor data we have seeing is bullshit, dressed up to be not bullshit because the headline number is so high when it's just second and third jobs, side hustles, government and healthcare jobs. Do you think the recession is knocking on our door currently?
I don't know. I mean, the data's been getting worse, but it's not terrible. The ISMs, the manufacturing surveys, that stuff has been terrible for a while. Consumer confidence is pretty terrible. The labor market is the one thing that's held up. And I think the reason that it held up was because we are finally working off the distortions from the pandemic. All the $3 trillion of stimulus money that we put into the pandemic basically distorted the labor market for a period of 4 years, and that's finally starting to unwind. So I think we'll get 4.5%, 5% unemployment sometime in the next 6 months. So,
okay. And do you think that you said something about the curve? If it goes to positive 50, if it goes to positive 100, are you now in that camp? Do you have that trade on, by the way? Do you think it's going to go to that?
I have the front end on, but not the back end.
Yeah, I have both. And by the way, people who are watching too, so easy to do a curve trade and not have to do ratios of it, now that there's alternative to the normal 2-year to 10-year contracts. And again, CME, if you want me to pitch your products all the time, all I have to do is write us a check. But by the way, I will say that those micro 2-year yield and micro 10-year yield are beautiful ways to put on curve trades without having to do the ratios. Have you ever seen those or no, Jared? You just do the traditional, right?
Yeah, I've never traded micros.
Yeah,
I just do it the traditional way.
And they're you don't have to ratio them. You don't have to do the figure out what the best ratio is. They just mirror the curve. What else you want to talk about before we go? We got a couple minutes left.
I got one actual last question that just popped into my head. I actually prefer the Sprott Physical Gold Trust to GLD. Do you have any issue with that in the awesome portfolio? And I only like it because it's actually redeemable in physical gold if you want it.
Yeah, does that trade at a premium sometimes? That's the only thing.
It does because
yeah.
of the physical aspect.
Yeah.
It does trade at a premium.
But physical gold trades at 4 to 10% premium, and normally in the gold markets. But anyway, I didn't mean to cut you off.
No, that's all I wanted to know is like in terms of that. I mean, obviously you want to get in the cheapest.
Yeah. Well, no, hold it though. If it consistently trades at the premium, then what's the difference? You know what I mean? When you get out, it'll be trading at a premium as well too if you need that money as you liquidate. So perhaps it doesn't even really matter that much if you're thinking about it, right?
It's a closed-end fund too, so there's a negative in that. But
Jared, anything else you want to pitch? You have a new book coming out? Anything like that?
Yeah, I have a new book coming out in October. It's called Night Moves, and it's a short story collection.
Oh, you told us you were working on that last time, so it's almost done.
It is done. It's I'm just waiting on a couple blurbs, and it's going to be released in October. So,
that's fantastic.
I love this book. I absolutely love this book.
That's awesome, and I can't ask for free copies anymore because I have to listen to books. I never sit down and read them. But
I bought this copy. I got to send it to you to get it signed, Jared.
Tell them where they can find you, Jared. Daily Dirtnap on Twitter, correct?
Daily Dirtnap on Twitter. And if you want to subscribe to the Daily Dirtnap, go to dailydirtnap.com. There's a link. He sent me an email. And if you mention the podcast, I'll give you a discount.
That's awesome. And by the way, the book is No Worries, How to Live a Stress-Free Financial Life. And it is an excellent book for anybody, investors at any age. Again, I'm an old man. I've been trading people's money for 37 years. I read it and then changed the way I invested my longer-term money, which, by the way, traders are not supposed to just listen to all the noise, as we say, and change. But this was not noise. This was a big deal. So
anyway, way to avoid the noise, right, Jimmy?
Exactly. Yep. Way to avoid the noise. My longer-term money, because again, I tend to sometimes overtrade even in longer-term portfolios because we like trading. You know what I mean? I like to think I got it beat, and then oftentimes you don't. But anyway, to you people out there, thank you again so much for all the support you've given us on this project. Thank you for the DMs. Thank you for subscribing to our YouTube channel, which is our big push. And we need that to succeed to keep going in the direction we are with the velocity we are. But thank you guys. It's all because of you guys. Right. And remember why Bobby and I did this. We both were in mainstream media. We hate that phrase for many, many years. We found out there tons of bullshit. You get pressured to give opinions of producers, pressured to give opinions of sponsors. We are not pressured to anything. You might think our opinions are stupid, but they're at least our own honest opinions. Thank you for joining us on The Future's Edge. I'm Jim Iuorio. That's Bob Iaccino, and that was Jared Dillian.